Okay, it's 11 a.m. We have over 300 registered participants, and I can see we have 96 who have joined us thus far. So I believe we should start. Well, good morning all once again. Just to give us a general overview of what we'll be doing today. Today's webinar has been put together by the Lagos chapter of the Nigerian Institution of Estate Surveyors and Valuers, which was founded in 1969 by a few qualified chartered surveyors, most of whom schooled in the UK. The institution was granted government recognition by the Estate Surveyors and Valuers Registration Act, Decree 24 of 1975. Now, the institution has a number of objectives. One of the main ones, which is why we've gathered today, is to establish a high and reputable standard of professional conduct and practice in the landed profession throughout Nigeria. Now, today's webinar has been put together so that practitioners, as well as anyone interested in the built environment, landlords and tenants alike, can be educated on what is likely to be in store for the real estate market in Africa in these trying times. It is clear to us that we are not facing the best of times. I mean, we all know that. And I hope you all washed your hands before logging on. However, even in tough times, we all know that a lot of investors thrive. Now, we're in a situation where financial models made last year, made 2-3 years ago, have been ridiculed by this scourge that we face now. And even simple projections are becoming unrealistic. In a world where for the first time, oil is being given away. You'll see what happened in Canada a few days ago. And African governments' big ports are running dry. So it is indeed a time to re-strategize, no matter what level of social strata you belong to. Today we have a strong panel of professionals from Botswana, South Africa, Ghana, and Nigeria. The original plan was to include a few more countries, but we know how difficult it is to be able to coordinate 10, 15 people to speak within a brief period. So what I'm going to do before I introduce our panelists is to lay some ground rules. The first one is for us to realize that only the speakers will have their mics and cameras on. I will throw relevant questions at the speakers and expect them to give their views within 2 to 3 minutes so we can have sufficient time to cover as many questions as we can. And please, we need to realize that if a speaker is taking longer than planned, sometimes it could be the passion with which the question is being answered, or even the difficulty in answering the question within 2 to 3 minutes. So I'm going to introduce our panelists today, and I will be reading this from a sheet of paper beside me in no particular order. We have Cyril, who is speaking from Accra, Ghana right now. Cyril is a highly knowledgeable real estate professional with hands-on experience spanning across the entire property development process, from deal sourcing, origination, to asset disposal. Cyril is the managing partner at Equilibrium Partners Limited, a boutique real estate development and asset management firm based in Accra, Ghana, and focused on the West African market. Prior to establishing Equilibrium, Cyril was the general manager at Devtraco Plus Limited, one of the leading residential development companies in Ghana. Cyril's real estate development experience in West Africa commenced with Laurel's Development Partners as a development manager, and he was also involved in commercial and retail development projects in Ghana and Nigeria. Interestingly, Cyril actually started his career as a civil engineer with Bechtel Power Corporation in the United States. Now we have the only female in our midst, Neltah Mosimanegape. Neltah is a real estate professional with several years' experience in the Botswana industry. Her career started with RDC Properties under its property and asset management division, where she was part of the project development team for the iconic Massa Center. She later joined Knight Frank and Exponential Investments, heading management of prominent developments in the CBD before she founded her real estate company, Tempest Gold. She is currently studying towards a doctorate degree in real estate through the Wits University and a certification in big data analytics. She previously sat on several boards, notable of which are the Real Estate Institute of Botswana and a few others. Neltah currently produces and hosts her own real estate talk show called Real Estate with Neltah. In 2019, Neltah was awarded the Women in Africa Botswana Laureate. So we have a laureate with us. She was also awarded the coveted Young Property Person of the Year title. Now, speaking from Nigeria, we have Jemil Dawodu. Now, Jemil brings a wealth of international industry experience from everywhere as the Managing Director of CBRE Accelerate Nigeria. Prior to joining CBRE Accelerate, he worked at various public sector authorities in the UK on their real estate portfolio, notable of which were Neom, Woolwich, and Haringey. He also had a private sector experience with Clottons, CBRE, and Stretchens in London as part general practice surveyor and as a valuation surveyor, while also gaining experience in property management, asset management, and corporate real estate, which he has now brought on board. Finally, speaking from South Africa, we have Jonathan Kohler. Jonathan is the Managing Director of Lansdowne Investment Properties, which is set up in 2006, and is currently one of the top real estate firms in Johannesburg. Prior to this, Jonathan had helped forge the strengths of Somercon Property Development with top signature developments such as the Nicole in Branston and the Lone Hill Village Estate. Here, Jonathan learned the intricacies of off-plan selling of homes and apartments to both investors and end-user occupiers. Specifically, Jonathan, while with Lansdowne, was involved in 18 different complexes selling 2,500 homes. Jonathan's experience in property development was a natural springboard for his creation of a specialized company, providing specific sales and management solutions for off-plan developments. So that's it for our panelists. Once again, I'd like to welcome you. One of the good things that COVID-19 has done is to let us know that we can have a Pan-African conference without anyone leaving their homes. So you're all welcome. I see we have 167 participants, and I expect that by the time we're rounding up, we should have over 300. So I'm going to go straight to what we're here for, the questions. This first question is a generic one. which I'm actually going to pass on to everyone. And perhaps we will do ladies first and start with Neltah. Now, what has been the impact of COVID on real estate in your country so far? Now, while answering this, it would be good to let listeners know, about the contribution of real estate to the GDP of your country and how heavily a recession can affect this sector if it does happen. Now, if you don't mind me adding this to that question, do you see a quick recovery when all this blows over? I know it's a very long one, so what I'm basically asking you is a first industry summary of Botswana.
Thank you so much, sir, for having me as a panelist in today's discussion. As mentioned, my name is Neltah, and I'm a real estate professional here in Botswana, specifying in real estate agency and property technology. Now, just to give you a brief overview of our GDP situation here in Botswana, our largest contributor to the GDP in our country is the mining industry. Obviously, Botswana has a very strong diamond sector and it contributes 35% to our total GDP. It's followed closely by other services, and the real estate service, which falls under financial services, contributes 12% to our industry. Now, if we look at the value add of the real estate sector, it has actually increased by 6.7% from 2018 to 2019. Now, taking a specific look at the residential sector, which I am mainly focused in, the residential prices have risen by 11.4% from 2018 to 2019. Now, our industry has undergone quite a few interesting times. Recently, the Transfer Duty Act has been amended, and this has seen the transfer duty being increased from 5% to 30% for non-citizens, while it stays at 5% for citizens, and first-time home buyers are actually exempted from transfer duty if they're purchasing property for the first time, of course. So now this was only enacted, I think, in February, if I'm not mistaken. And from February, then we're obviously hit by the COVID-19 pandemic. Now it's been sort of like a double shock to our industry. Obviously, the real estate professionals were a bit concerned about the effect of the transfer duty, especially when you look at the foreign direct investment that'll be coming into a country. The demand, I think I could safely say, has sort of decreased, especially from foreign investors, considering the increment in the transfer duty. And also, there's been a bit of investors who have pulled out of their deals, which couldn't be completed in time before the transfer amendment duty has been enacted. The real estate sector right now is obviously going through a bit of a slump, and it's trying times, it's confusing times, it's something new that we've just experienced in our country, and I'm sure in the real estate industries across Africa. So it's definitely something that it's exciting, but at the same time a little bit scary for professionals and also relevant stakeholders such as landlords and tenants. Now, just to wrap up your question, with regards to a quick recovery, I do not necessarily foresee a quick recovery, but I do see a transition period that will definitely alter the way real estate is conducted in our country. Thank you.
Thank you, Neltah. A few very interesting things that countries would perhaps need to take on board, because one thing I've been able to pick here, if I'm correct, is that duties went up from 5 to 13% for foreign. 30.
Yeah, it's quite a huge leap.
So you're basically driving away foreign investors.
You could say so.
It stays on 5%. But what I find very interesting is the fact that there is zero stamp duty for first-time buyers.
Correct.
Correct. Okay, yeah. Take this on board. Can we stay in the southern part of Africa? Jonathan? the impact of COVID on real estate in your country so far? Where are we?
Yeah, so Gbenga, we foresee the impact to be absolutely huge. When I have a look at what the property market's been doing, or let's take the residential property market, even over the last 10 years, there hasn't been much capital appreciation in the residential space or the commercial space. I'd say that people, even before COVID hit, were sort of under quite a bit of pressure. For example, if they had bought an investment property off plan, between 2010 and 2015, and they wanted to sell in 2019, just before COVID hit, they wouldn't have got much capital appreciation at all as it is. And because there's been quite a lot of property development in South Africa over those 10 years, there's actually an oversupply in the market at the moment. So, to actually get some capital appreciation from a property that you bought is non-existent as it was. Now you've got, for example, if you bought an investment property and you've got a tenant in the property, there's a good chance that either that tenant in the property, or if you earn commercial office space, that business in your property hasn't been able to pay rent over the past 2 months. So I really feel that it's going to drive the property prices down, and people who are trying to get some capital appreciation in the market, it's going to be non-existent. How long do I think it's going to last? I think it's going to last a very long time. I think it's going to take, the real estate industry that is affected by this. It's every industry. And I think people are earning less. People have had reductions in salaries. People can't pay bonds. They can't pay mortgages. They can't pay rent. So I think it's going to affect it a lot. And having a look at the real estate in South Africa to the GDP, it obviously falls in the finance and real estate sectors, but the real estate sector itself is only 4.7% of the GDP. And interestingly enough, that employment contribution out of the entire country is only 0.8%. So it shows, that it only employs a very small amount of the country. But 4.7% of the GDP, in the fourth quarter of 2019, there was a minus 1.4% decrease in the GDP in the fourth quarter. So I envision that being even worse in the, when the results come out at the end of the first quarter of 2020. And interestingly enough, out of the 10 sectors in the GDP, the finance and real estate industry was one of only 3 that had a positive increase in the fourth quarter of 2019, which was 2.7%. I feel that in the first quarter now, for 2020, that would be negative. And I feel that everything would be negative. However, not painting just a complete negative picture. I mean, if you're in the real estate industry now and you want to buy a commercial property for investment purposes, or if you want to rent commercial property, similarly, if you want to rent residential real estate, or if you want to buy, it's an unbelievable time, because people are burning. People can't pay their mortgages. People can't pay their levies, rates and taxes. We've got a property management business that manages over 12,000 units. And we found a reduction in the last 2 months of tenants reducing their rental paid by 30%, and levies, which are paid by homeowners, is also up. However, a lot of the complexes that we manage, for example, they've got quite healthy reserves. And I think it's never been a better time to have an effective managing agent that is budgeted for your complex and your development and made provision for times like this, because they're actually giving levy payment holidays for the next 2 or 3 months while people get back on their feet. So long story short, I think this is the real estate market is going to struggle for a long time. However, it's an unbelievable opportunity to purchase.
Thank you so much, Jonathan. One key thing that came to mind is the fact that you manage over 12,000 units. So we definitely have to come to you when we're talking with regards to prop tech, because I'm sure you have to use a lot of technology to 100%. Be able to run that amount of properties. Okay, so we move to Jemil. Impact of COVID on real estate in Nigeria. What are your thoughts?
Sorry, are you addressing me now?
Yes, Jemil. Jemil.
Right. Okay. With regards to the commercial market in Nigeria and also globally, we're looking at least 2 to 3 years before the property market can come back on its feet. I mean, this takes us back to a similar situation that happened in 2005 during the global credit crunch crisis. But this is a little bit more severe than the credit crunch crisis. Now, we're seeing across board that companies all across the sectors, that there's a complete shutdown in all sectors. So from the manufacturing from the industrial to agriculture to real estate. And we're now seeing that a lot of companies are struggling financially because there's no business translating around the world. So we are facing situations where people can't pay their rent, especially those in the retail sector are going to be worse hit. Now, I mean, since the start of the COVID-19, we have been speaking to a number of landlords trying to get rent holidays, rent reductions during this period. And it's going to be tough times. Those in the retail sector who predominantly operate on a cash flow basis are going to see close about a 50% reduction in revenue, if not more. And even though COVID-19 is lifted tomorrow, there's a vaccine tomorrow, it's going to take at least 2 to 3 quarters for people to get their mindsets back to where it used to be. So it's going to be a long stretch. Now, as at January this year, I mean, the contribution of real estate in Nigeria to the GDP was about 7.5%, if I'm not mistaken. Now, in our perception, that's pretty low, and that contribution will further reduce. But then, you know, the way the real estate market works is it works in 2 folds. One, if you're a cash buyer, it takes advantage of recessions. This is the best time for you to come into the market to acquire new debts and acquire properties. If you're one that you're heavily indebted or you're heavily leveraged, this is a very bad time for you to be in a situation like this. So we're going to see, it's going to be a bit of a mixed blessing for investors to survive in this market. And Nigeria being a very peculiar market where landlords believe that Nigeria is immune to what's happening globally. This is going to take a lot of landlords by surprise because now it's a question of cash flow. So companies at the moment now are deepening into their reserves and everyone is finding a way on how they can reserve their cash flow because we can't put a timetable on how long the lockdown is going to be for. If we look at the global numbers, we find out that the numbers of debts are not reducing. They're actually increasing day by day. And until a vaccine is found, and you know, most of the WHO have said between 12 to 18 months before they can perfect one. So the impact on that is going to have on the real estate is that it's going to bring the real estate market to its ground. And we're looking minimum 2 to 3 years before we can get to where we used to be. So a lot of properties or vacant properties in the market now, especially in Lagos, who for grade A properties where they were looking at the rent of about 650 to 750, there's going to be a rude awakening because those rents are going to drop significantly because it's a question of opportunity cost. Now, if anyone's been following Bloomberg, over the weekend, you had the WTI sale price of crude oil fell to about 17 cents and only picked up over the last couple of days about $2 a barrel. The Brent and Bonny Light have also dropped. Now, the problem Nigeria faces is that we don't have silos where we can actually put these crudes and store them. So majority of our crudes are on vessels at the moment looking for buyers to buy them, and there are no buyers. Now, it's so bad that even Nigeria is offering, I read in an article, I'm not sure how accurate it is, offering a $5 discount on the crude oil price, which is even below $20 a barrel.
That's right.
And the cost of producing a barrel is about $20. which means that the government is going to find it very difficult to fund the budget for 2020, which means there'll be hardly any cash in circulation. And that's going to trickle down to the manufacturing, construction, and predominantly the real estate. So it's going to be tough times. But what we're going to see coming out of this is it's going to change people's perception of how we look at real estate, how we see pricing, and the market is going to readjust itself back. So the likes of the investors with the grade A builders over $750 will be looking under the $500 rents. And if they want to maintain those high levels, you're going to be looking at rent-free periods close to 12 to 14 months, or 12 to 18 months rent-free, because the market can't sustain the kind of rents currently in the market today. And that's going to have an impact on valuations as well.
As well, yes. Okay, thank you, Jemil.
You're welcome.
Ghana, what's going on?
Thanks, Gbenga. Yeah, in Ghana, the story is very similar, as everyone has said on the panel. From a macro level, you know, a lot of contracts have either been suspended or canceled. A lot of multinationals, you know, had to repatriate their citizens back to their home countries until this pandemic was under control. Now, you know, what that has is what implication it has on the economy is demand for real estate, right? For example, you know, there was an oil project, $4.4 billion oil field exploration project that was supposed to be signed Q1 this year that just got suspended. The US government mentioned that they repatriated about 1,400 American citizens back to the US right before Ghana went into lockdown. Now, what does that mean for us? It means demand for office space, you know, new office space has been challenged or has been reduced. These tenants, these 1,400 Americans who were renting residential properties have had to move back. Now, we all know that the world, you know, will be under lockdown for the next 3 months, right? 1 to 3 months. A lot of countries are not going to open their borders up for the next couple of months. That means that these tenants who are renting properties might pull out of their leases, might renegotiate their leases. We don't know, right? So overall, the implications of this on a developing country like Ghana, where a lot of our demand comes from the international market, is very huge, right? Now, let's take hospitality, for example. I mean, it's been forecasted that a lot of the hotel occupancies are going to drop from 70%, which was the average over the past couple of years, to about 20% or even less for the rest of the year, right? Because hospitality is directly correlated to, you know, business and leisure travels, right? In the commercial and the office space sector, I mean, a lot of businesses are going to review their forecasts over the next 12 to 24 months, their growth forecasts. They're going to try and, you know, work from home, you know, as they've realized that, you know, working from home reduces their demand or their need of office space. That means, you know, a lot of tenants will be renegotiating some leases. Some may take this opportunity to pull out of some leases that maybe they thought were too high in terms of the asking rent. You know, so a lot of those conversations are going on. Retail, for example, is also going to be impacted significantly as buyers tend to focus or tend to adopt more of a cash preservation approach. They're only going to be buying essentials, right? So, you know, retailers would be also renegotiating their rents as their sales numbers will not be reached. In terms of residential, I think I already touched on the implications of the reduction in demand from the multinationals. But that is a huge concern for us, right? Because a lot of our buyers are investor buyers, so they're relying on collecting rents from multinational tenants. So that market as well is going to see a significant decline. And you know, we don't know when this vaccine is going to be, you know, commercially available to the world. And as they said, it takes somewhere from 12 to 18 months to actually approve a vaccine and have it being utilized all over the world. So the implications are very significant. In terms, based on that, I mean, a recovery now, you know, a lot of people, our finance minister forecasted up to 3 years for a full recovery from the losses that have we've incurred on the economy. And I think that is pretty accurate, especially if you think of where Ghana is now. I mean, we're in an election year, and as we know across the continent, usually second half of an election year is very slow for decision making, and if power changes as well, that first year is pretty much a wash. So I think a 2 to 3 year recovery time is fair, or is safe to say, but that's also contingent on us getting the vaccine and also not and getting a second wave of this pandemic, because as we can see in other countries like Singapore, they're already beginning to see a second wave, and experts in the US as well are beginning to forecast that the pandemic might come back this winter, right? And that has huge implications on the world, right? So I think a 2 to 3 year recovery time is what we can say for now.
Okay. So it seems the general consensus from these 4 countries is a 2 to 3 year recovery time. So it appears we have very difficult times ahead. Of course, the next thing would be, how do we manage these difficult times? Now, this brings me to another question, and because we can't ask everyone the same set of questions, I'm going to throw some at the different speakers. Talk about diaspora remittances, because it's no doubt that folks from our different countries who live abroad are going to lose jobs. Now, statistics in Nigeria in particular show that these diaspora remittances are in excess of $20 billion. In fact, I think in 2018, it was somewhere around $24.5 billion, which was 6% of our GDP at that time, with a lot of this going into real estate. Now, do you envisage, I don't think the question should even be, do you envisage? We all know it would reduce. How significant do you think this reduction would be in diaspora remittances? And how do you see it affecting the real estate market further? And I'm going to throw this question at Jemil and Cyril. Jemil first. Your mic is muted.
Okay. Right. I mean, we're going to see this is going to be a very sad, dramatic period for everyone. Due to this COVID-19, we're going to see there are going to be companies that are going to disappear, unfortunately, over this period. We're going to see a lot of real estate companies doing the same thing. A lot of investors as well will fizzle out during this period. I think at the end of the day, we would only see the big players that might be able to sustain this period of the market, and that's because of their reserves predominantly. Now, what we've seen across board, especially from diaspora, we've seen articles from China that as at today, 3.5 million people have lost their jobs in China, and that number is yet to grow, and we're going to see that across board, both across Africa. And interestingly enough, I had a conversation with one of our clients in the oil and gas industry, and they said to me that all their contracts have all been suspended. And this is a company who was about to take acquisition of an office space of about 2,500 square meters. So that's been put on hold. They're not going into that. And they're going to have to let go at least 80% of their staff strength. Depending when 80% of their staff strength, because all their contracts have been suspended. So if there's any contract that is on board, considering the price of crude in the market and their CSRs and all their overheads, is they can't sustain that. So a lot of that is going to happen. So I would say in the next 12 to 18 months, there might be very minimal activities in the real estate market, especially if you're looking at it from an occupier side point of view. And why do I say that? It's because disposable income for companies have literally just disappeared. And what everybody's trying to do at the moment is manage their P&Ls, which is the profit and loss accounts. So we're experiencing that except the only structures that are going on now is that except companies who have absolutely no choice, have to move locations, are the ones doing that and taking advantage of what is happening with COVID-19 to be able to get a better deal. But what we're going to see at the end of the day is companies are now going to come, once we come out of the COVID-19 phase, is companies are now going to readjust and start to look at how do we shrink these spaces, because now COVID-19 has shown us that we can actually work from home. Without COVID-19, we will not be having this forum via Zoom. So it's going to change, it's changing all our mindsets on our approach to real estate. And that's going to take a big hit. And a lot of us consultants have to go back to the drawing board and reaffirm or restructure the real estate market.
Going to happen over the next 12 months. So any Ghanaian in the diaspora is going to switch to a cash preservation mode, right? No one is going to be spending. They're only going to buy essentials until they really understand, the full implications of this pandemic, right? Now that has huge implications on what people are going to be remitting back home, right? Most of our buyers, I'll speak for the residential market, just to give you an example, most of our investment buyers, about 40 to 50% of the investment buyers are from the diaspora. So you can imagine that, this year, that is going to drop significantly. People are not going to be buying investment property as such, especially when the multinationals have packed their bags for now, right? If you buy an investment property, chances are your occupancy is going to be zero for the next 12 months, right? So, remittances are going to see a big haircut. We'll be lucky if we get 20 to 30% of what we got in 2018. But that said, I think, the light or the opportunity here is that, buyers who are sitting on cash, who have a long-term view on the Ghanaian economy, will be looking for deals, right? And I think developers who also have products on the market will be looking to get liquid by selling some of their properties, and as long as a deal can be made, I think it's still a good time to buy property because the Ghanaian economy is a very diverse one. We don't rely on one particular commodity to make whole. Put this in perspective: oil and gas is just about 5% or 6% of our GDP. Agriculture makes about 23%. Services make up a huge component of about 50%. But within the services bucket, you have, financial and insurance. You have commodity trading. You have real estate. You have healthcare. So, our GDP bucket is quite diverse, and so we think that any buyer who believes in Ghana and takes a long-term view should continue looking at Ghana as a good investment place.
Okay. Excellent. Thanks for that. We go to the next question. Now let's talk about the government, because this is a time when governments worldwide are either handing out cash to people or supporting businesses. Now, I'm going to throw this question at Neltah and Jonathan. We start with Neltah. Now, what palliative measures, if any, because I know some governments are still thinking about what they should do, has your government promised to keep the economy afloat? But let's actually talk specifically about real estate. So you can actually mention the general palliatives, but then has anything been done to ensure the real estate market stays afloat and people do not lose their equity in real estate? So Neltah first.
Thank you so much for the question, sir. I think in terms of measures, the government of Botswana has been somewhat very quick to put in place measures that not only cover the real estate sector, but all industries across board. For example, we have in place the wage subsidy, which was recently introduced a week or two ago. So basically how this wage subsidy functions is that the government will be subsidizing all wages for all industries across board, except for stock exchange services. And this will be a 50% subsidy that the government will be offering. Now, this will be only offered from April to the end of June, so that's 3 months. And during this period, businesses are not allowed to retrench any of their workers, and the relief by the employees, I think it will also lessen the chance for employees possibly losing their jobs. And we also have the business subsidy, which will be relieving some of the business issues that industries may be faced with. I think what's very important to note is, well, what is my concern rather is what's going to happen after this wage subsidy period is over. Like I mentioned, it'll be ending in June 2020. My question is, what is going to happen? And the government has not yet given us measures that will be put in place afterwards. Now, if we focus specifically on the real estate market, there is nothing that the government has communicated specific to our industry, and unfortunately, I cannot comment much on that. But if we look at lease agreements, usually these are at the discretion of the landlord, and what I've seen is a lot of landlords are actually willing to negotiate rentals, for example. They're also willing to negotiate sales prices, maybe offering some sort of discount or installment purchase agreements. And if you focus more on, this is for residential, if you focus more on the commercials, I think I have witnessed a domino effect from South Africa, considering that we have a lot of multinationals for commercials and for retails. So usually what is occurring is South Africa is probably going to roll out to us here in Botswana. For example, if you take a look at entities such as ShopRite, the Edgars and the Jets, I anticipate what's happening in South Africa to be rolled off to the franchisees here in Botswana.
Interesting. Really interesting times. So what happens after June? That's the question.
That's a good question.
Yeah. What happens after June?
And I think it's also just important to note that we're currently on a lockdown. I think we're left with just 8 days until our lockdown is over, and the country will be entering a 6-month state of emergency thereafter. So maybe dynamics will change slightly, and the laws and how things operate will also be a bit relaxed, but it's just a matter of waiting and seeing how it actually plays out compared to how it's been written down in the papers.
Okay, thank you, Neltah. So Jonathan, palliative measures by your government and to generally kickstart or jumpstart the economy again. And are there any specifics targeted at the real estate market?
Yes, so I must commend the president. He's been extremely proactive to try and sort of decrease COVID-19. I mean, we've been on lockdown. The whole country's been on permanent lockdown now for 5 weeks. And our numbers, you know, the first couple of weeks in the lockdown, our numbers sort of stabilized and actually went down, you know, but yeah, I mean, the numbers have gone back up again. But he's done a number of things. I mean, yesterday he came out with an announcement, and, you know, he's made 500 billion rand available to small businesses and also people who've just been affected. So, yeah, I mean, as a lot of the business owners that I know, you know, they've all applied, you know, for all sorts of SME business loans, et cetera, et cetera. You know, the difficulty is, you know, with sort of 60 million people in the country and everyone applying at the same time, it's putting a lot of pressure on people actually getting back to you, you know. But I must say our financial institutions have also been really, really good. I mean, in terms of payment holidays, you basically just have to contact your bank, you have to contact your service providers and just ask them for the payment holiday, whether it's, you know, whether it's rent, you know, because you've got tenants coming to us to say, listen, I can't pay rent this month. So, you know, one of the biggest things for us is to communicate with our tenants. And if the tenants can't pay, rather than speak to the owners and say, guys, listen, you know, your tenant has been retrenched. He can't pay for the next 2 months. Can you go to your financial institution and ask them for a payment holiday? You know, so it doesn't really impact either the tenant or the owner. You know, we've obviously got our UIF, our unemployment insurance fund. You know, yeah, I mean, all employers should be paying across to the receiver of revenue. You know, that also covers that. However, you know, it's, you know, they've got such an influx of people trying to claim from the UIF that the UIF have asked employees to actually apply on behalf of their employees. You know, so from a Lansdowne perspective in all 4 of our businesses, you know, we are applying on behalf of our employees and sort of just sending a lump sum. So if we are in the position where we need to, for example, do a 30% salary reduction across the staff that we have, hopefully the UIF will pay for that 30%. You know, there's also people in the country who have done extremely well over the past, you know, like the Oppenheimer family, who started De Beers in Anglo America, you know, that have pledged R1 billion to small businesses. The Ruperts, also R1 billion. Dostane, you know, the owner of Auto and General, Telesure, you know, and all of the large insurance company have pledged 390 million rand of their wealth. You know, so people are really giving back in this country. People are making a massive effort to support their staff, to support the needy. And, you know, a direct thing that impacts the real estate sector is that, you know, because of the previous sort of 6 months before COVID, we had already had interest rate reductions, you know, but the moment COVID hit, you know, sort of 20th of March, the Reserve Bank decreased the repo rate by 100 basis points, or 1%. So that repo rate is now at 5.25%, which is the lowest it's ever been in the history of the country. You know, which really does help it. You know, it makes a massive difference in terms of your bond repayment. And, you know, if tenants are asking for a reduction in rent and it's gone down by 1%, you can give them a reduction in rent. You know, so the prime lending rate that our banks lend to people is at 7.75% at the moment, which again is the lowest it's ever been. You know, so I have to commend the president. You see, yeah, it's also sort of for transfer duty rates. You know, the first R1 million is transfer duty free. You know, so I must say they've gone out of their way and done an unbelievable job. I think both the public sector and the private sector, in terms of trying to support the country as much as possible. And it's been amazing to see. You know, people have really, really reached out. So again, you know, I just say that at the moment, you know, if you are in the position to borrow money, take advantage of a seriously depressed real estate market, you can really find properties from day one where your rental yield covers your entire mortgage. And I think that over time, you know, the capital appreciation will be really, really good, but it will be a long period of time.
All right. Just a quick question, Jonathan. What are the current mortgage rates in South Africa like? What's the range at the moment?
Yeah, so I mean, for first-time homeowners, the banks are giving 100% bonds.
Okay, at what interest rate?
Yeah, you know, so I mean, the prime lending rate is 7.75%. So obviously, depending on your risk, you know, the bank might turn around with a low interest rate like this and give you prime +1 or prime +2 or prime. You know, very sort of secure private banking clients in the past are given prime -2. I mean, I don't know if they'll still be getting a prime -2, you know, because, you know, then they'll be getting 5.75%, but it literally is, it's an unbelievable rate. And it is, you can charge a rental that people are paying that can cover your mortgage of close to 100%, including your levies and your rates and taxes. So, I mean, it really is a no-brainer, and it's also a good time for tenants who are renting to maybe also apply for a mortgage and rather own than rent. However, as we know, people are not really going to be in that financial position because people's salaries have been cut. But you really are, I mean, if you can start an investment property portfolio at the moment, you'll make a lot of money in the long term. I mean, how many people have money, you know, so that's, you know.
Sure. And with your single digit interest rate, 9%, it's a different situation in West Africa, where you'll be lucky to get a mortgage at 18%, but we'll still come back to mortgages. I want us to go to the FDIs, foreign direct investments. Now, of course, it's clear to us that, you know, developing countries, and I'm going to throw this at Jemil and Cyril. It is clear that developing countries cannot attract much money in times of negative growth. There's this saying that, you know, a few business people have used. It's like when you're on an aircraft and the aircraft is about to crash, you put on your own oxygen mask before that of your neighbor. So this is a time where people, investors are having problems even in their home countries. So do you see more foreign direct investments coming in to your countries, Nigeria and Ghana? And if you say, yes, you expect money to come in, why would anyone invest? And how are you going to be able to encourage them to come into your countries? So let's start with Jemil, then we go to Cyril.
Well, I think foreign investments will still come in. Regardless of the COVID-19, Nigeria is an emerging market. And if you look at our commercial market, we've only just over, say, 5 years ago, really started producing top-of-the-range, purpose-built commercial buildings and shopping malls. I mean, we've had our problems in the past during the last recession where the returns on these investments have slowed. But here's the thing. Nigeria's got the numbers in terms of millions, so we're a commodity country, so to say. So you have a country of over 80 or 200 million people, in the sense that we have not even yet reached the top of our economy. We haven't even reached the peak in terms of real estate development on the commercial and the retail side. We've just literally just scratched the surface. Yes, there might be a reduced returns for the foreign investors, but the question is that we've got the numbers here and there's still significant space for growth. As compared to other European countries, is that majority of these economies have already reached the peak of their economy and can't even grow any further. Now, when you look at, say, for instance, you're looking at, I'll use London as an example. When you go to London and you're looking at the top range properties or the grade A buildings, you're talking 30 to 40 pounds per square meter for office space. Vis-a-vis as compared to Nigeria, where you're talking about $750 per square meter. But one of the major differences is that it's our costs of the debt. So in the UK, you're borrowing money at a single, in Europe, you're borrowing at a single digit. And in Nigeria, if you're taking a Naira loan, you're borrowing at a double digit. But even with those double digits or single digits, it's that investors are still seeing a marginal return vis-a-vis as investing in their own countries. So there is hope. And I think foreign investors will still come in because the opportunities still lies within Africa. And we have not even started to scratch the surface. I mean, if you take, for example, co-working, for example, it's a new concept in Africa and we're still going by it. Come outside COVID, once we're over the COVID-19, you're going to see a huge number of requests coming in about co-working spaces. You're going to see a huge dynamic change about how commercial organizers or how organizations view their business strategies going forward for the next 5 to 10 years. And once people start to review strategies, then there's an opportunity there. The question now is how specialized are the real estate consultants in order to be able to provide those services to their clients. So I think there's a lot for us to do. It's the same thing, for example, go back again to the credit crunch in the United Kingdom, which was a global thing in 2005. When the credit crunch hit, it hit the whole of Europe, got to Africa probably much later. But at the time of the credit crunch, everybody came up to the same thing. Where's the hub? Where's the retail? Where's the real estate market going? But consultants came around and we changed the dynamics of the market. We changed the dynamics of negotiations and the dynamics of how deals are being done. So, and that's, we're going to see the same kind of scenario operating post-COVID-19. So for example, you've got Americas now whose interest rate is over 0. So come after COVID-19, a lot of investors or a lot of banks or finance companies are going to be looking for people to take these loans. And Africa is going to be one place where they can actually put these funds in and to be able to revive the real estate market. Unfortunately, we haven't seen any policy from the federal government encouraging the foreign investments to come into the country. Even during this period of the COVID-19, they have done little or nothing to be able to sustain the real estate market. And purely on one basis, is the governments themselves are struggling on how to fund the 2020 budget, because predominantly our budget is solely based on oil, or 70% of it is based on crude oil. And that's kind of fizzled out. Yeah. But the question is that people are looking at, yes, we know there's a problem now, but where are the opportunities? And the opportunities are there. When you talk about, and I'll speak predominantly about the commercial buildings. Now we know the grade A buildings are in the market, people are struggling to lease their spaces. But then come after the COVID-19, you will see more of the grade B buildings coming up, right? And those ones will be faster to move in the market because they'll be much more affordable. And if you've got new investors who are now borrowing money to be able to bring these buildings up, their cost of borrowing will be much less than those who actually borrowed money pre-COVID-19, which means that you can offer cheaper rents and better deals back to tenants. And those in the grade A buildings are probably going to start asking their landlords for a reduction in rent. So we're going to see that balance in there. So I think there will still be opportunities for foreign investments to come in because the opportunities are there. It's just spotting where those opportunities lie.
Yeah. All right. Thanks, Jemil. Because of time, we're trying to see if we can round up 12:30, if possible. So I'm going to twist this question in a different way for Cyril. You know, Jemil was talking about attracting fresh FDI. Now, let's talk about those who have already invested in your country. The question is, how do you keep foreign funds in your country? Do you see people staying in, riding the storm? Or do you see them saying, you know what, I just want to exit and take a hit?
Right.
What do you think would happen?
Right. I think, you know, a lot of investors that have already committed to projects that are, you know, already spending on a project, mid-construction, you know, execution, will I think ultimately look at a more of a long-term view. But I think what they'll do immediately will be to reevaluate the business case of a project, right? To understand, you know, the real implications of this COVID-19 Ghanaian market, you know, over the next couple of years. So I think a lot of investors would stay in. They might slow down their investment pace. They might relook at costs and, you know, renegotiate any leases that they have or any cost, contractor costing that they have, to try and make sure to minimize their cost, which will ultimately allow them to still make a decent return on their investment, even if their rental expectations are decreased, right? So I don't think investors are going to pull out. Those who are already in the market, I think they're just going to maybe slow down spending a bit and kind of take this opportunity to relook at the business case and renegotiate terms where applicable.
Okay. All right. Thanks. I think this helps. Now, I'd want us to move on to technology. I mean, prop tech is on everyone's lips. And I'm going to throw this question at Neltah and Jonathan. Neltah first. Well, this is a time when, I mean, what we're using right now is technology to have our meeting. And I remember when Jonathan was talking about his property management portfolio. The Lansdowne manages over 12,000 properties. So even before PropTech has become necessary, I believe Lansdowne has been very active with technology. So I'm going to throw this question at you, and you feel free to answer with regards to how PropTech would help with sales, leasing, property management, even valuation. So let's go to Neltah first.
All right. Now, if we look at PropTech in Botswana, it's been very slow for real estate practitioners to adapt to. I'd like to say that the real estate industry in Botswana is quite it's quite traditional in the sense that people still want to operate the old school of way. And a lot of people are still resistant on incorporating innovation and technology into their operations. But of course, with the boom of social media and digital advertising, I think we can say that that has been a plus when we look at the incorporation of technology into property services. Now, in my line of work as a real estate agent, there's definitely a lot of opportunity for PropTech to be utilized, especially at such a time where we're encouraged to social distance and we're really forced to work from home as a real estate agents. The challenge though that we're facing is real estate agency and also valuations and construction that are very field-based occupations. We have to be out there in the field, we have to be out there doing inspections, meeting tenants, and with the current pandemic and the situation that we find ourselves in, it's quite difficult to carry out those tasks which are our everyday tasks that we have to be doing in our line of work. So PropTech suggestions that our company has already been implementing is definitely the incorporation of 3D tours, which I believe can enable potential tenants or people who are interested in buying property from viewing properties from the comfort of their own homes without having to physically go to the properties and view it in person. Now, the only challenge that I've had, and I've previously mentioned this in a couple of discussions, is how our Real Estate Act has stated that a real estate agent is only liable for receiving that commission once they have physically shown a property to a tenant or a purchaser. Now, the incorporation of technology, I wonder, will a 3D tour constitute as being showing the property to a tenant and a purchaser, and will they be able to gain that commission that is stated with accordance to the laws of the country. And we can also take a look at facilities management, which is also something that Tempest Code is actively rolling out to the rest of Africa. This does incorporate having the agency side and also combining it with the property management and having both the tenant and the subcontractors who are involved, as well as the landlord, being able to communicate on a technology platform rather than having to physically meet. All payments will be done online with regards with the incorporation of payment gateways. So I think there's a lot of opportunity for PropTech. Like I mentioned, my only concern is that Botswana is a little slow on uptaking new disruptive technology, but I think with the COVID-19, we found ourselves in a position where it's no longer a choice, but it's sort of mandatory. Yeah.
Thanks so much. And I think there's something very profound that you mentioned there, and I want to go by it, because agency law, once you physically show someone a property,
exactly,
takes it, you are entitled to your commission. What happens with the use of technology when you send someone a virtual tour? The question is, how do you track that? How does one trace that? So something that I believe we need to, take note of. And even those who are listening, for instance, I know the executives of the Nigerian Institution of Estate Surveyors and Valuers are listening, and I'm sure it's the same in other countries, even legal practitioners. So we are going into a new normal where people need to start re-examining the law and even creating fresh laws for technology, because that's extremely important and vital. So Jonathan, PropTech, South Africa.
Yeah, so it's sort of like the catch phrase that everyone's throwing around and they're excited about it. How much difference it's going to make in the market, I don't really know. It's still to be seen. You know, when I have a look at my estate management business, which is similar to Neltah's facilities management business, I mean, we've developed an in-house ticketing system. We've actually had a management consultant in the business for the last year and a half who has sort of designed a specific ticketing system, which owners and residents can use, and also trustees of those different complexes and developments and estates can view their ticket. You know, for example, any sort of operational type of stuff that's happening in the different estates, they can view the ticket. You know, the moment they email, you know, they get generated a ticket, it gets allocated to an admin person at the back of the Lansdowne office. And you can see exactly when the contractor was called. You can see exactly how much it costs. You can see exactly how much time, you know, so that ticketing system sort of, I mean, it helps us more as a company to manage our business better. It also gives, it gives sort of clarity to the person who requested the service and requested the ticket. However, similar to what Neltah says, you know, I mean, we generally get awarded quite a lot of property management complexes because of our ticketing system, you know, so we'll go in there and we'll sell what we can do because of the ticketing system, and they'll award us. And then none of the trustees that we presented to will use the ticketing system ever again. So a similar thing in South Africa, like private property. When private property, the company first came around, they wanted to take the agent away. You know, so take the agent away and you can sell your house as an owner, and you could, you know, they would give you the platform to take your own pictures, upload it onto the website, sit in your own show day, for example. And it didn't really work, you know, because people, number one, you know, real estate agencies and agents have a lot of experience in terms of selling, in terms of what people ask, in terms of, you know, if a buyer's actually messing you around and they can't qualify for a mortgage, they find that stuff upfront about that potential tenant or potential buyer. You know, so people have been trying for a long time to sort of do that one thing in property that's going to take the market by storm, you know, the Uber of real estate. But the truth is that I haven't seen anything worldwide that's really taken the market by storm, specifically in South Africa, not. Yeah, I mean, I'm a member of a group called Entrepreneurs Organization. And there's another entrepreneur called Gil Sperling, who developed a system called Flow, which is basically like a behavioral tenant app that rewards tenants for paying their rent. And he's trying to sort of stir up the sort of tenant-landlord relationship. And yeah, I mean, he's got about 85,000 users now of Flow. And when a tenant pays on time, they get rewarded for that, and they get discounts with an insurance company, or they get discounts, you know, with a plumber, or they get discounts with gym, etc., etc. And they're doing a similar thing to what Discovery Bank in South Africa has done, where it pays you. And Discovery, for the guys that don't know, is a medical aid or medical insurance, and it actually rewards you for being healthy. So they've got a service like Vitality, where if you go to gym, you get a specific amount of points, which means you being more healthy. So you get a reduction in your fees, or you get a reduction in your gym fees, or you get a reduction on Emirates when you fly. You know, so Flow is quite an interesting one in SA. You know, that's rewarding tenants. You know, the difficulty with it is that to actually get the market, you have to spend so much money trying to get the market. And they've got a lot of investment. The shareholders and owners of that business have a lot of money, and they've got over 50 million Rand invested in the business from some international prop tech investors. However, it's less about how good the tech is, and it's more about how much of the market you can get and how quickly. So, if Flow had a $5 billion US investment, they could probably roll it out over the world. But it's less about how good the tech is. It's more about how you can get the tech to as much of the market as possible and be that first person, and how much money you have actually backing that. Because in the real estate market in South Africa, I can speak on behalf of, is that people still like to meet an agent on site. We've got the visual tours, on the development that we're selling off plan on behalf of developers. You can go into our units. You can do a visual tour. You can go 360 throughout the entire room. However, when people want to actually purchase or put pen to paper, they want to go to the property with the agent. They want to actually see it. They want to tangibly see where it is. And it's a similar thing with this, the sort of legal profession. There are people, there are sort of tech law sites and services that you can go on and you can get a generic contract and you can do this. But I can promise you right now, when you're getting divorced, you go to the best divorce lawyer that you can and you want to tell them your story. And tech can stir up the industry as much as it wants. But when it comes to the real estate market and you investing in the biggest asset that you're ever going to own, all of the gimmicky things can help the real estate agencies close the deal or get people more interested. But I still feel that personal touch is the thing that will close it at the end of the day.
Absolutely. So clearly technology would help to save time, because at least by the time you send a virtual tour to someone, there are times that the person looks at it and just does not like your kitchen. So straight away, you have cut off one inspection. But bottom line is, before dropping that fat check, probably as much as 97% of people would want that physical inspection. Okay, thanks for that, Jonathan. I want to now go to the business side of what we're talking about, professional service firms. I'm not too sure about the demographics of those on this call, but I dare say my belief is that probably 50% of those listening run real estate practices, do a lot of estate agency. And it's important for us to learn from each other with regards to the way our practices are being run in our countries, as well as what we think we would do differently. For instance, I'm aware that in some countries, the way salaries are paid is that people get some stipends and then they get big commissions based on the sales that they're able to close. In some other countries, it's just salaries. Now, things are definitely changing. We're going to have a new normal. So my question, and I'm going to ask if you could restrict this as much as possible so we can take our final 3 questions to about 90 seconds each. How do you run your business back home with regards to the way staff are being handled? And what changes do you see yourself putting in place with regards to motivating your staff and even having to terminate where necessary? And perhaps we'll do ladies first and take Neltah.
Okay, I won't be too long on this one because I think maybe my passion has been noted when I discuss the prop tech, and that's the strategy that we're really trying to move in with regards to how Tempest Gold is strategizing its business. And this is something that we had prior to COVID-19 be interested in pursuing actively, and I believe that will also help us set us apart from how agents are doing, as well as give as well as make our tenants be able to adapt, as well as to be comfortable in how things are going. So our main interest is to definitely cater to our tenants, because at the end of the day, our tenants and our purchasers are the ones who are paying our salaries. And we're just trying to find ways to incorporate what tenants are suggesting and fitting it into the mold of our company and seeing how we can adjust strategically.
Thank you, Jonathan. And then we go to Jemil and Cyril.
Sure. So, yeah, I mean, I can share with you, yeah, I mean, I can share with you what we're doing in our business. Yeah, you know, so I mean, yeah, I mean, it's an extremely difficult conversation to have. You know, that's one thing that I must really, really stress. You know, I mean, you've got, yeah, I mean, we've got sort of over, yeah, we've got about 50 employees, you know, that I've had to have one-on-one meetings with and discuss what we're doing as a business, which, you know, which is extremely difficult. In the beginning of this pandemic, I didn't think that we would be affected. I sort of thought that my business was bulletproof because we primarily a property management business. You know, so we've obviously got a real estate side that does sales and rental, so those are commission based, you know, but we manage thousands and thousands of properties, you know. So I sort of had a look and I sort of assured the staff, I said to them, guys, our business is bulletproof because we're an annuity based business. We collect levies from owners inside complexes and we pay their service providers. And on that property management side, on the estate management side, our fees are not even dependent on people paying their levies or not. We still charge the fee. However, what's happened is that, you know, because we've got all of the businesses within one office and we've got shared costs, the sales and rental staff over the past 2 months haven't been able to do any new deals. So although we've got annuity business and we're sort of collecting rentals and we're collecting levies, it's really affected the sales and rental side because for the last 2 months, you know, there's a couple of 100,000 Rand shortfall every single month, which is then now impacted on the other side of the businesses. So what I did for my employees, you know, and I told them all this with a one-on-one Zoom call, you know, which I must reiterate again, makes a hell of a difference. A one-on-one call when you're talking to your staff and your staff can see you, can see the emotion on your face and can see that you're sincere about what you're saying, makes a hell of a difference. So one thing that I did is I've actually taken a personal loan to pay my salary for the next 5 months. So that I, you know, being the largest cost in the group, is completely taken my salary for 5 months away to try and free up as much cash flow as we possibly can. Then we've had a look at a percentage reduction, and this will differ from country to country, but our sort of labor law says that if you're going to do a percentage reduction, the percentage reduction has to be across your entire organization. You know, so we had a look at a percentage reduction. We are still able to pay, but we don't know how long lockdown is going to go for. You know, they first did it for 4 weeks, and then a week in extended it to 6 weeks. And yeah, you know, it keeps changing all the time. And we have to do a percentage reduction across the entire group to safeguard against this going for 2 or 3 months. And, you know, I've reminded my staff, you know, that we're a very, our company is in a very fortunate position in that we are an annuity business. And although we've had sort of a 30% increase in tenants not paying rent, so we're unable to charge commission on the rent, and maybe a 10 to 15% increase on owners not paying their levies for the management of the estates. You know, we budgeted quite well for these complexes. They do have reserves, and our government has been quite proactive in terms of holidays on bonds and things like that, on mortgages. So, yeah, we actually haven't had to retrench even one of the 50 employees, you know. So so I mean, it's just about for me, it's about showing humility to your employees, really.
Yeah. Thank you. And I guess trying to get some understanding from them as well. So Cyril, what's going on at your end?
Yes, for us, we're primarily a real estate development firm, and we do offer brokerage services, but most of it is outsourced, right? So for our core development team, we managed to stay lean over the past couple of years, and so our forecast over the next 6 months is that we have the ability to maintain our full-time staff. However, consultants, are paid per work done, and so because of that strategy, we don't foresee any layoffs over the next couple of months. But a lot of this is contingent on how soon our economies get back close to normal. I mean, Ghana is out of a 3-week lockdown. The jury is still out in terms of whether that was a good decision made by the government or not. But I can imagine if we are able to stay clear and our cases go down, then business will kind of pick back up a bit. But if we see a second wave and we have to go back under lockdown, I mean the implication of that will be quite significant. That said, I know a lot of companies are looking at a reduction in salaries down to like 70-60% over the next 3 months, and then they'll kind of reevaluate it from there, because at the end of the day, it's all based on the amount of cover you have to run your business, and you want your cash to go as long as possible until you have to close your door. So a lot of salaries are being looked at, and people's work scope are being cut, working from home as well. So that's what's happening on this.
All right. Jemil, all good? Jemil, can you hear me?
Yes, I can. I can hear you now. What we've done as a company is to first group our staffs into 2 categories: essential staff and non-essential staff. And what we're trying to do is focus on the essential staffs who are key to keeping the business alive, so to say, and ensure that those essential staffs are servicing our clients, and to make sure the clients are getting the best service possible. And one of the things we've done in those regards is that how we've dealt with the non-essential staff is looking at how much non-essential staff do we have and how do we want to treat it. Will some staff take compulsory holidays during this period? And how do we treat our cash flow? Because that's very key, because we don't know how long this is going to go for. But one of the things we've done in trying to motivate our staff is that we have daily, we call it the COVID-19 calls. So we have daily meetings with all our essential staff and the non-essential staffs as well on 2 different sessions. And for those who have access to data and who can actually log online, and predominantly just asking about their welfare and ensuring that they're all safe. And then we also go into the crux of the business in terms of how are the clients reacting and how the clients, what kind of questions are coming from the client. What we've also done is going to interactive sessions with our clients as well, to make them understand that we're all going through a difficult period. We understand the setbacks that this will have on both sides of the fence, and try to reach some sort of mutual understanding on how we intend to take the business forward. So I think at this point, there isn't a right or wrong approach. I think what's important for us is just ensuring that every member of staff feels very much important, and they're all part of the business, and the business is looking out for all the staffs during this difficult time.
Very important. Thank you, ladies and gentlemen. I'm going to throw a question that is either very easy or very difficult, depending on how prepared we are at these difficult times. If the best client was to walk up to you and ask you, where do I put my money right now? I've got X amount. It could be $100,000, could be less, could be $1 million. What would be your advice? And I'm not going to throw this at anyone first. Who wants to take this first?
Yeah.
Okay. Jemil, your hand went up before Jonathan. So, Jemil, then Jonathan, then Cyril, and then we'll take Neltah.
You know, one of the key, thanks, Gbenga. One of the key questions you would ask your clients, either a post-COVID-19 or a pre-COVID-19, is what's the purpose of the investment? And why are you buying this investment? So in a period like this, if it's a cash buy.
Sorry, Gbenga, my internet is a little bad. I couldn't hear you.
Oh,
okay, can you hear me now?
Can you hear Jemil?
Can you hear me now?
Hello, Gbenga.
Can you hear Jemil? Okay, can you hear either of us?
I think it's either fluctuating.
Okay.
All right, let me just go because we don't have much time.
Go ahead, Jemil.
So the first question you would ask if a client wants to put his money into real estate at this point is, what's the purpose and why are you buying this property? So are you buying it to land bank it because property prices are dropping? Because this is a time where you can't really get any return on your property. So if that's the question, so whatever the purpose is, then you can tailor what that advice will be. So if it's advice that you're buying because you see an opportunity in the market and you want to take advantage of that opportunity, then we can go ahead and help you negotiate a price probably lower than what it was pre-COVID-19. So it all depends on the purpose and why that particular client wants to buy that particular asset.
Right. Well, you're not going to say cash is king, keep your money. Not likely.
No.
Okay.
It depends on what it depends. If the purpose for what he wants doesn't make financial sense in this market, then the advice will be keep your cash.
Yeah. Okay. All right. So Jonathan, a lot of our clients are in a cash preservation mode. So the question is, how do you get this out of them? Do you really think you should? And if you think you should, where would you be putting this money?
Yeah, so Gbenga, I think residential real estate at the moment in South Africa is an excellent investment. Although there are a lot of tenants that are affected, there are a lot of people that are not affected, that are still getting paid. And you just need to put a good tenant, you need to just find a good tenant. So it's very important to make the right choice in real estate broker to find that tenant for you. And I mean, with the interest rate being as low as it is, if you are still employed, you can apply for 100% mortgage. Because the interest rate is so low, you can put a tenant in there that's still employed that will pay for your entire rental amount, your levies, and your rates and taxes. So it will cost you nothing per month, and you can put a tenant in there, and you can rely on the capital appreciation over time. And look, I mean, if you're a cash buyer, you can still put your cash there, and with the rent and with the reduction in real estate prices, you can get a sort of a 10 to 11% rental yield at the moment. And you can make offers. You can go to properties with your 10% net yield, and you can just make offers that equal your 10% net yield. And with the market being as depressed as it is at the moment, you'll get that 10% yield. And then on the flip side of that, you've got your capital appreciation, which we don't know when the capital appreciation will start to pick up again. But I can tell you that, it's the bottom of the market at the moment. So as long as you're getting that yield, if you've got the cash, you're getting 10%. I mean, it's much higher than you'll get from the bank. And when the market does pick up, you've got your capital appreciation as well. So I really don't think, it's for as little, I mean, you can buy a studio apartment in the northern area of Johannesburg for 500,000 Rand. And for that, you need to earn a gross income of 15,000 Rand a month. You don't need to earn a lot of money to buy an investment property. So take advantage of it now. And that's my sales pitch.
That's a very good sales pitch. Yeah. So Cyril, your sales pitch. You need to unmute your speaker, your mic. Yeah.
Yes, I'm good now. Yes, so Jemil and Jonathan, I think we're pretty much spot on. I think it all depends on the investor's appetite, right? Residential in Accra, property price, investment properties, particularly below the price point of $300,000, have always and have continued to deliver returns, yields between 8 to 12% per annum. Now, what I'll advise anyone who has some cash now is to definitely consider an investment. However, there'll be some key criteria. One, it has to be something that is not going to be delivered to the market within the next 6 months, right? Because you struggle with take up and tenants who are, back in their home countries and companies reducing expansion plans and all that. So definitely invest in an off-plan development, something that's about 2 years away. Negotiate a good price that allows you to get a relatively lower entry point. So your capital appreciation, once a project is completed, is already activated, and negotiate a good payment plan, right? Because ultimately it's all about how you also mitigate that investment risk. Negotiate a good payment plan, stretch it out as much as possible, and watch your contracts as well. We don't know what's going to happen in 2-3 years, so definitely ensure your contract is structured in a way where both parties have some way to kind of renegotiate with it. And also, last but not probably the most important, is the credibility of the developer. The last thing you want to do is put money in a developer that is not very well capitalized. Your money might be stuck for the next 5 years because this COVID-19 pandemic might actually wipe them out. So, overall, good time to invest, but your investment criteria, your due diligence has to be very, very tight.
Okay. All right. Thank you. Is Neltah back with us?
Yes, I am. Gbenga, please just kindly repeat the question because I missed it.
All right. Others have been making a sales pitch. The question is, if your best client was to come to you today with a bag of cash, are you going to tell him to go into a cash preservation mode? Or what would you advise such a client to put his money into at these difficult times?
All right. Looking at the situation, I foresee the valuations of properties actually declining. And I think maybe in a few months, we'll definitely see depreciation in how much properties are actually being listed for. So I'd probably advise my client to probably just hold off for a couple of months, as I foresee just a slight dip in how much the properties will be going for. But as the other panelists have mentioned, it's definitely a good time for buyers, and maybe not so much a good time for sellers, as they might not get a good return on how much they're selling their properties for. And we also need to consider, especially if we're looking at the foreign direct investment, like I said, the transfer duty amendment has definitely put a few, if not many investors off, in the sense that it's gone from 5% to 30%. But on the plus side, I foresee the COVID-19 actually reducing the prices of property, and this could possibly just balance out the increments in the transfer duty and So definitely I would encourage potential purchases. Hold off just for a month or two. Let's just see how things are going to be once the lockdown is over, and we'll see the state of the current real estate industry in Botswana. And another thing that I'd really like to encourage local Botswana citizens is to look at options such as crowdfunding. I know one of our attendees here actually did pose a question on what crowdfunding can do for real estate and how people can take advantage of it. That is definitely a good strategy in terms of investments, and I think it can reduce the risks that could be associated with purchasing prices, as it will be spread out across the crowdfunders that will be involved in purchasing the property.
Thank you very much. Cyril, I was going to ask a question. In Ghana, what's the typical advance rental paid by tenants, residential properties? Is it quarterly, annual, monthly?
It's so legally, legally there's a legal answer, and then there's the market answer. Legally, you can't collect more than 6 months for a lease period of up to 1 year. That said, you know, landlords sometimes tend to have an upper hand because maybe there's a good demand for their property. So we're seeing one to 2 years still happening, but over the past,
but that's taking properties that they have actually managing on behalf of their clients. So you could say, but traditionally you pay a year in advance.
Yeah, okay. Thank you. I'd like to thank our panelists, Jemil, Cyril, Neltah, Jonathan, and I want to believe that the approximately 250 people who have been with us today have been able to take something away from this very, very instructive program, which is an initiative of the Nigerian Institution of Estate Surveyors and Valuers, Lagos chapter, as well as their resource center. And for the benefit of those who joined us late, we have actually been able to exchange a lot of ideas. One that particularly has hit me is the fact that in Botswana, for instance, stamp duties for first-time buyers now are down to 0. And there's so many other initiatives that can be brought in. Rents are payable monthly in South Africa, and I'm sure that helps to reduce the default. So I'd like to thank the panelists once again and thank all those who have signed in to listen to us. I will want to leave us with this quote by Warren Buffett that I really, really like, because these are definitely difficult times, but I believe that those who are smart will prevail. Warren Buffett said there will be interruptions, and I don't know when they will occur. I don't know how deep they will occur. I do know they will occur from time to time, and I also know we will come out better at the end. And I believe this will be the fate of all our practices, all our businesses, and even our jobs. So once again, thank you so much, and please watch out for the next series by the NIESV. Have a wonderful day. And
thank you.
Stay safe.
Thanks, guys.
Thank you. Thank you.
Bye-bye.
Bye.